Whereas a trader, we're looking to capture those small pockets. All the time we see the stocks, right? They're going up, they're going down, they're moving. So we're trying to time it where we're trying to buy it on the way down, we're trying to sell it on the way up. There's certain technical patterns that give us an edge, but the difference basically is the trader is in and out. A day trader might be in and out every single day, every few minutes, right? A swing trader would be trading every few days, maybe every few weeks. He'll hold on for a position for weeks. And then there's investors that are, dollar cost averaging. Every month you're putting in good, and those are good habits to have, is like every month you take a little bit of your paycheck, keep investing it. So I still preach that. I say, hey, trade for income and then invest for wealth building. So
welcome back to the Money Seat Podcast. Today, my guest is Anmol Singh. Anmol is a professional trader, investor, author, and entrepreneur. Anmol, welcome to the show.
Looking forward to chatting with you. Thanks for having me.
Anmol, I see the sign behind you. It says Live Traders. Tell us more about your website, livetraders.com, and what it's all about.
Yeah, definitely. So I started Live Traders in 2015 as a way to coach and train other traders and try to shorten the learning curve for them, because online there's so many different resources. But I find that everybody wants to teach, but they don't really want to show how it's actually done. So that's how we came up with the name Live Traders, is that every single day I trade or invest, it's live stream. So win or lose, people will get to see it. So that's where the name came from, is Live Traders, that, we'll do everything live, bring our accounts up. And I think that's the best way people can learn, because they can see sometimes how I'm losing and how I'm handling myself in that. I think that's the important part that maybe people don't really talk about. So that's what we're trying to do with Live Traders, and started that in 2015 and, going strong for now.
Yeah, it sounds like you've been in business for 8 years. And anytime a business is around for 8 years, that means you're generally doing something well. And congrats to you on that. Tell me, how many years were you trading before 2015? And what gave you the confidence to say, I know what I'm doing, I'm good at this, I can teach others?
Yeah, so I'm on my 13th year trading now, started in 2010. And, it was 5 years before I started Live Traders. And the reason I was confident in doing that is because in my first couple of years, I was trading for a prop firm. Back in the day, the same old, everybody's in a desk, 100 traders, just, pushing buttons all day long. And the company would give you the money to trade. In exchange, you would give them percentage of your profits. So I started trading for the company and then kind of worked my way up in those rankings. And they had a system where, okay, you start on a simulator account. And then once you hit, let's say, $200 a week for 2 weeks in a row, then they give you $50,000 to trade with. And then so on and so forth until level 10, where they give you $10 million to trade with, and they take 30% of everything you make. So I traded with them for a really long time. And then that firm brought me on. The CEO called me and said, hey, we have a lot of new hires. You progress pretty quickly through those levels in the firm. A lot of people are still stuck at level 5, level 6. Would you mind coaching them and showing them how, you got to level 10? So I started coaching for them as just like a teacher. I wasn't really even getting paid for that. Just loved doing it because it was just something that I geek out on, trading and investing. So I was just coaching traders, and I saw that a lot of them were getting really successful results. And in 2015, that company that I was working for got bought out by another company. So at that time I had to decide, do I want to join the company? And then I kind of asked myself the question, well, I do have my money saved up now, so I don't really need to give them 30%. So that's when I kind of went off on my own and started Live Traders in 2015.
And I think that's really important. So it sounds like you had professional trading experience for many years, and you say, yeah, I can do it on my own. I think that's fantastic. So a bit of a segue here. For young people who are interested in that type of a career, what kind of a background do you need to be able to be hired by these trading firms?
Honestly, they're looking for just mentally tough individuals that can follow a system. For example, if I give you, okay, this is the system, it's very black and white, this is what you got to do. And everything we have models for, spreadsheets, we're not just taking a guess on our gut feel. So it's basically executing and following a system and not letting emotions take control. So a lot of people, that when they come into trading, they let their greed take over, or they let the fear take over, or the stock's going against them. And rather than taking a small loss, they keep holding on, hoping it'll come back up, and maybe buying even more. So I think that's the things pitfalls you got to avoid. The best traders that I've found are actually pilots, ex-pilots or ex-poker players, because pilots know how to do a checklist. Okay, we're going to do this, check, 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 execute on the system, not trying to think on their own. I think the stock is going to do this. Anytime a human element of thinking comes in, it's over. You're not going to succeed. So try to be as robotic. So I think best characteristics for traders is somebody with an open mind, willingness to learn, and they can leave their ego out of the way, because market doesn't care how successful you were in your previous business. Market doesn't care. Market is what the market is. So we just got to realize that. So, yeah.
So you don't necessarily have to have a certain background. You don't have to be good at math, or you don't have to be an engineer or something. Like pretty much anybody can learn it as long as you're mentally tough.
Yeah, I was horrible at math in high school. Like really, like I dreaded, even I barely passed all the exams. So it's funny because, when my high school people look at me, they're like, how did you get into this business? Because you were the worst at math. I'm like, that's why we have softwares for things, spreadsheets now that I don't have to do the math. So you don't need, there's everything can be automated these days with softwares and spreadsheets. So the learning curve has gone down. It's just, if you can control yourself, you could succeed in this business.
And so tell me, you use the phrase trading. I often use the phrase investing, but there's a definite difference between the two. How do you distinguish between the two terms?
Yeah, great question. So investing is somewhere where, as the word says, you're investing in something, either in a business, you believe in a business, maybe you believe in the CEO, you believe in the industry. And usually investment means you're investing for a long haul, right? You're not looking to get in and out. Whereas a trader, we're looking to capture those small pockets. All the time we see the stocks, right? They're going up, they're going down, they're moving. So we're trying to time it where we're trying to buy it on the way down, we're trying to sell it on the way up. There's certain technical patterns that give us an edge, but the difference basically is the trader is in and out. A day trader might be in and out every single day, every few minutes, right? A swing trader would be trading every few days, maybe every few weeks. He'll hold on for a position for weeks. And then there's investors that are, dollar cost averaging. Every month you're putting in good, and those are good habits to have. Is like every month you take a little bit of your paycheck, keep investing it. So I still preach that. I say, hey, trade for income and then invest for wealth building. So the way I teach people and the way I do it is I trade for an income. That's what I pay my bills off and live off. But then I take a percentage of my trading profits and they're automatically invested. I don't even look at it. And I think that's the habit that most people should have.
I think that's great advice. Yeah. So you trade for income, you invest for future financial success. Yeah, I think that's fantastic. So tell me a little bit more about your trading habits. Are you more of a technical analysis? Are you more like, do you follow the news cycle? Like, what are the signals you look for before you enter a trade?
Yeah. So when it comes to trading, it's all technicals based on chart patterns that we've, back tested over the last, 50 years. And they have a certain probabilistic edge, just like a casino would have a little edge. So we have a certain edge where, okay, I know this pattern is going to give us potential of making a 2-to-1 return, right? So now if I can get a 2-to-1 return, then I could win only 4 out of my 10 trades. So I could lose 6 of them and still make money, right? Because if every loser is $100, but every winner is $200, let's say, you can win 40% of your trades and still be profitable. So we're looking for those edges. So certain technical patterns have those edges that we look to exploit or use every single day. So that's kind of like trading style. When it comes to investing, I will look at the companies, what I believe in, and more so it's broad based. What I think about the industry, what I think about the company, not so much going into the financials, but just overall, my thought process. But then I'll still use technicals to time the right entry so I can buy it correctly. And for example, October was a great time last year, right, to buy on those dips. And now if you bought it correctly, you're already up 40, 50% on majority of your investments. And I think that's kind of what we look to do, even with my investments.
And when you're trying to enter a trade, typically, how long do you hold it for?
So if it's a day trade, it's probably going to be like a few seconds to a few minutes, right? Very quick, in and out. When it's a swing trade, I might be in it for a few weeks. Like recently, I've been in a trade on silver, and I've been in for about a week now. So those could be a few weeks, maybe a few days sometimes. And then there are also something I call core trades. So that's an alternative to investing, but using technicals, where we might be in a stock for a few months, maybe a year at best. So that's another style that we do. So they're all different timeframes: day trading, swing trading, core trading, and then there's investing.
And do you typically trade the same tickers over and over?
When I'm day trading, typically I have like my favorite stocks that I love, that have good options, very liquid, volume is there for you to get in and out. So yeah, day trading, I have a few set of stocks that I like, but we still, every morning we scan for stocks that are gapping up or gapping down based on news event. Maybe they got upgraded. Maybe, something happened with the company, maybe great earnings, and they're opening higher than where they open. So we look to trade those gaps because that is a pattern that we have a certain edge in. So that might be different gaps every single day. And as it relates to swing trades, core trades, all the time there's different stocks. There's whatever has the pattern, basically. So we are very non-biased. A lot of time we don't care what the company does. We don't even know what the company does. It might just a 3-letter ticker, but if it's got the right technical pattern, then that's a trade we're going to execute on. So those are the things we look at.
A lot of new traders struggle with the mental aspect of trading, right? In other words, they enter a position, it goes up a few dollars, and they're like, oh, I want to take the money off the table, and they close it too soon. They don't let the winners ride. And on the flip side, when it starts moving against them, they tend to hold on to losing positions for a very long time in the hope that they'll recover. How do you typically overcome those? And how do you teach people the mindset of like, how do you properly look at trading? Like, what's the proper mindset? And how do you get that across to your students?
Yeah, I think those people usually go through those things because they have uncertainty, and they have uncertainty because they don't have a trading plan, right? Like I wouldn't get into a business without a business plan. If I'm investing, I also do angel investing in different startup companies. I'm not going to invest in a startup without a business plan, right? So why would you think you can come to the markets, trade, and compete with people, traders from Goldman Sachs, traders from our company, and you could think you could just come in and, compete with us? It's not going to work out. You have to have a trading plan, which is a set of rules. Okay, first things first, where am I going to get in? Then first thing we decide is when am I going to get out if I'm wrong? That's the first thing we look at before we think about even profits. When am I going to get out if I'm wrong? So now that I know, okay, if I buy a stock at, let's say, $100, and if it goes to 99, I'm going to get out. So I know my risk is $1 per share. So now if I decide I don't want to lose more than $1,000, then I know I can buy up to 1,000 shares. Because if I buy 1,000 shares, it goes to 99, I get out, I lose my $1,000, which is exactly what I expected to lose. So there's no uncertainty. I know exactly what I'm going to lose on the trade. And on the upside, then I might look for 102 as a target. So 2-to-1, right? So now, again, I could be right 40% of the time and still make money. So you have to have a well-defined plan on when you're going to get out when you're wrong, and then when you're going to get out when you're right. If you don't have a plan, then you're always going to feel like you got out too soon, you got out too early. But how do you know if you got out too early if you never had a plan? You never had a goal. So how do you know you got out early? So I think the removing the human element and trying to think like an AI, that's how I teach people. It's like, think like an AI, right? AI is not going to be like, oh, I think it's going to, no, this is the model. We're going to execute on that model. So those are the thinking that people need to have, a little robotic mindset. Now that it's not going to help you in relationships. Ex-girlfriend used to tell me, pretty unemotional. I'm like, so it doesn't help in certain areas, but in trading and investing, I think that's how you need to be.
And when you place an order, do you automatically put in your limit orders on the exits right away?
Immediately. So as soon as I get into a trade, unless it's an options trade, if it's a stock trade, I will always have a stop loss. Because see, in trading in the markets, we cannot control what the stock's going to do. We cannot control how much money we're going to make. The only thing we actually have control over in trading is how much we're going to lose. Think about that. Oh, that's the only thing we can control. So if you can control that, you're never going to have those surprise losses. Oh my God, I just lost crazy amount of money. It's never going to happen. All losses are the same for me, right? Every loss is the same. So I size accordingly. If it's a $5 stop loss, well, then divide whatever I want to risk, divided by $5. So then I know how many shares I'm going to buy. So I always buy the appropriate amount. So I'm never, caught off guard, basically.
That's a very good way to approach it. And Anmol, you mentioned options. Do you do a lot of options as well?
Mostly, yeah. For day trading, I do a lot of options trading because there's a lot of opportunity. Like you don't even need the stock to do a whole lot, but the option could be moving, 30, 40, 50%. So we look for those certain pockets that we've tested that, okay, we know we're going to get a little bounce here. And day trading is typically very quick. I don't recommend day trading for most newer people coming into the markets because that has a learning curve. Like I lost money my whole first year, right? Like I lost money every single day or every single week, my first year of trading, because day trading is very fast. So it also needs a lot of your muscle memory and skills to be able to place your orders in time. But yeah, I mean, it's always different. For most newer traders, I recommend swing trading so they can hold on for stocks for a few days, few weeks, and see how it plays out.
One of the complaints I hear often from people who are just starting out is they say, I got a 9-to-5 job. I don't have time to trade. How much time does someone need when they're just getting started?
The great part about actually West Coast is like we have a lot of students in West Coast that might trade in the morning for like an hour, like just the gaps. There's one strategy that we have is only trading the gaps, which you can only trade the first hour. So a lot of people in West Coast, I know they trade that first hour of day trading and then they go actually to the regular job, which I always advise people to never quit your job when you're coming into trading, because that's just going to put more pressure on you to make money from trading because you don't have anything else coming in. You're going to make wrong decisions, right? You're going to influence by your emotions. So always have a safety net before you come into trading. But yeah, I think if you have a job, you can absolutely swing trade. So it's an excuse that most people say, oh, I'm busy, I have a job. No, you can swing trade. It takes 5 minutes to place an order. And now you're not going to exit the stock for like a week, maybe. There's nothing for else you to do. So start with swing trading, start with investing, build those good habits. And then if you're on the West Coast, you can trade the morning first hour and then go attend your regular job. And so I think that's how I'd recommend 9 to 5. Don't let it hold you back.
And I'm guilty of that as well. So it's 6:30 in the morning here on the West Coast when the market's open, and quite often between 6:30 and 7:30, I'm on my on my phone or whatever, and looking at trades and adjusting my options position. So I've been playing around with options for a couple of years now, and I lost a little bit of money at the beginning, but now my account's coming back, and I'm almost back to even. And it's very cool. I mean, I could talk about options all day. But
yeah, and I would say you don't even lose money because you learn a lot from it. It's tuition to the market, right?
And so on the topic of tuition, when people just start out, and let's say they approach you and say, look, I'm a new student, I got a little bit of money saved up. My questions are, how much money do people need to set aside to begin? And how much should they expect to lose as part of that tuition cost?
I would say have at least minimum 6 months of your money saved up, because there's going to be a learning curve with just like anything else. So have like 6 months worth of your rent and all of your things taken care of. Then now at least you have 6 months of wiggle room to figure this stuff out. So that's what I would recommend. And it's going to be different for everybody. If you have a bigger lifestyle, you might need more. If you have kids, you might need more. If you're a single guy, you might need less money. So I think, but definitely have 6 months of worth of, money saved up before you start coming into the markets to try to make money on it. Because typically what I've seen people, it takes about a year for them to really kind of get it, because they're going to make mistakes and they're going to trade really small in the beginning. So it gets up to a year or two level where you scale up enough that you can live off it and pay your bills off it.
Yeah. And in terms of the actual account size, right? Because a lot of people say never put more than like 5% of your entire portfolio into one trade, right? Some people even say like 2%, right? So if someone is going to follow that rule, how much of a minimum portfolio size do they need to get started to minimize their chances of being blown out on a couple of bad trades?
If you're talking about swing trading, then I think you can really start with anything, right? Because then it's about percentages, just like any investment. It's just about percentages. You get 30, 40% a year, let's say, from swing trading. That's great. You keep growing your account. Now, if 30% of $1 million, 30% of a $10,000 is the same 30%. So that would be for swing trading. For day trading, obviously, you need a minimum 25,000. That's just the FINRA regulation. But really, you need more. You need 30, 35. Because what if you lose your first trade with a 25,000 account? Then you're under the PDT rule. So I would say, realistically, 35, 40,000 is a good amount if you want to get into day trading. But if you want to swing trade, start with whatever you have. I would say still at least 5 or 10,000 would be a good number to start with.
I got to ask for your opinion. You mentioned PDT, right? It's the pattern day trading rule. What are your personal thoughts on that rule?
I think it's ridiculous. It's ridiculous. It doesn't make any sense because you can go to a casino. You're allowed to go to a casino, bet as much as you want, drink as much as you want, right? You can bet on sports games as much as you want. But for trading, which is kind of safer because you can actually get out. There's a stop loss. When you bet, you can lose all of it, right? There's no stop loss, but that's allowed. And then in trading, you're not allowed to get out. I think that's the worst thing because that causes more harm to traders than good. Because if they're in a trade, now they're like, oh, I can't get out because that'll be PDT rule. They might end up holding it. Whereas if they were allowed to get out, they could have minimized their loss. So I think it's actually a horrible thing. It should be repealed right away.
I agree with you 100%. And it's funny, almost every single person I speak to, when I ask them, what do you think about the PDT rules? Everyone hates it. Everyone says what you say, like it makes no sense. It's counterproductive. Like that is one law that really should be repealed. I fully agree with you on that one. In terms of people who are young and they're just trying to, explore the world, they're just starting out on their careers. They're looking at, maybe starting a business, maybe getting into trading. What is your recommendation on passions versus skills? Should people follow their passions?
No, I think you need, you first get good at it. And that's what I hated because, when I moved to New York City, I had, it paid a lot of money, different charity dinners to have dinners with multimillionaires, billionaires, hedge fund managers, just to have lunch with them or dinner. And they would all give me the same cliche advice, follow your passion. They give the worst advice, because what does that even mean? What if I'm not good at it? What if my passion is I want to play golf, but what if I'm horrible at it? I'm not going to make any money at it. So you always get good at something, right? And when you're good at something, you're automatically going to be passionate. Think about it, right? What's something in your life that you're good at, you're going to be passionate about it. You want to showcase it to your friends, your family, because you love it. So always build the skill first, build the competence, get good at it, and watch, you'll automatically be passionate about it. Because you can never be passionate about something you're horrible at, So always focus on skill development, right? Make some money under your belt, and then you can do whatever you want with your money, follow your passions. But first you got to develop the skill set.
I think that is great advice. And it really is going to have a much likelier outcome of success for you, right? It's like develop good skills, make money, and then you'll have the money and the free time to follow your passions, whatever they may be. But I think trying to flip that and trying to follow your passions, then to make money, then to fund your lifestyle, et cetera. I think that's kind of like putting the cart before the horse. It works for some people, but I think the odds are really stacked against you if that's the way you want to do it.
And most people who are given the advice about passion, they've already made it, and then they're given the advice about passion. But if you look back on their career when they didn't have that much money, they weren't following their passion. They were just hustling, doing whatever it needed to get done to build their business. So, the advice usually is given by people who've kind of made it. So we have to take that with a grain of salt.
That's right. Yeah. It's like survivor bias, right? Like there's really strong survivor bias built into that follow your passion advice that a lot of people overlook. Right behind you, I see the book. It's entitled Prepping for Success. Tell us more about the book and what can people learn from it?
Yeah, so I wrote that book, mostly as a notes to myself. That was originally how I intended it. It was just writing it, notes to myself, things that I've learned along my journey. Because, over my, course of career, I've hired and worked with many different coaches. I've attended many different workshops, seminars, personal development, because I really believe trading is all about mindset. So that's all I focus my life on is just personal development growth, spiritual growth, hiring mentors, coaches. But I also realized that not everybody has that amount of money or time to devote to learning all these different things. So I wrote down everything that I've learned over my journey. And then, some of my friends looked at it. They're like, you should probably turn this into a book. And I was like, yeah, if somebody gave me that book 10 years ago, it would have made life a whole lot easier. So that's kind of how I wrote the book. It's about 10 keys for success, 10 things if you can start doing right now, they're going to get you closer to your goals, and they're going to actually move the needle in your business. And the book has nothing to do about trading, nothing to do about investing. It's literally about just mindset and, personal development, because I believe that's universally applicable to any business or any endeavor that you might encounter.
Excellent. I'll put the links into the show notes. And right now, tell us a little bit more about Live Traders as a company. How many employees do you have? How many students you have? How much does the average program cost, et cetera?
Sure. So we have a very small team. We're about 7 people that run Live Traders. It's me, my business partner, Jared, who's actually my mentor. He taught me how to trade. And then he was in the same firm we used to work at. So during the buyout, we said, hey, why don't we team up and start something new together? So he's the one who actually taught me how to trade. So it's him. Then we have our, regular employees that handle the business side of things. And then we have other assistant coaches that run their own services under Live Traders brand. And then student-wise, we have thousands of members in our, subscription communities, in our live trading chat room, in our newsletters. We do monthly Zoom calls, and we trade live every single day, Monday to Friday. It's all live streamed, so I can't hide. Win or lose, you'll see it in real time, what's happening in my account. And I think that keeps me sharp, because that keeps me disciplined too. Because hey, I can't do something stupid because everybody's watching. So I think that's actually made me a better trader since I've started Live Traders. And
over the last 8 years since you've been running Live Traders, what kind of annual returns have you seen in your personal account?
So it's been pretty good. Day trading, I typically don't count returns. We think about it in R units. So for example, let's say my risk unit, R unit would be risk unit. So let's say my risk unit is $1,000. So that means every single day trading loss is capped at $1,000. And then I try to make $2,000 on every single trade. So we'll call that 2R, right? We'll call that 2R. So, and if I lose a trade, it's minus 1R. If I win a trade, it's 2R. So we try to make 200 to 250 Rs a year from day trading, right? And then we have swing trading. Those returns, we don't risk more than 2% of our account in any given trade. And we've been getting about 40 to 60% annually, so far. This year, a little lagging behind because the market's obviously really strong. But this year, we're only at 17% at the moment. But hey, we'll see how we end up at the end of the year.
17% in 7 months is actually really, really good. I mean, don't.
Yeah, it is. But when the market's like 25%, then I'm like, the market's outperforming me. I could have just put it at the spiders. So that's kind of, we compare ourselves. But we've so far beat the market every year for the last, 7 years in a row.
Amazing. What's the best way for people to reach out to you?
Best way to reach out to me would be Twitter or Instagram. That's where I'm the most active. My handle on both of those is Delta90, DELTANINETY. I had this username a long time ago, and then it got verified. I didn't want to change it, so I just kept it like that. And then if you want to learn more about trading, then livetraders.com is a great resource to start with. We have tens of thousands of hours of free lectures on our YouTube channel. That's where people can just start learning right away. Yeah, so that will be the best way. And for the book, Amazon, Barnes and Nobles, or preppingforsuccess.com.
Thanks very much. I'll put all those links into the show notes. And one last question. Is there a really cool backstory with Delta 90 on how you got the name?
Yeah, so I used to trade, Delta 90 deep in the money options back in the day. It was like a stock replacement strategy when you don't have, the whole amount of money to take a big position. So we should just buy Delta 90 option, which is just mimicking the movement of the stock with like, half the money invested in it. So that's what I originally started with options trading. That's where the name came from.
Very cool. All right, man. Anmol, thanks very much for your time today. It's a really good discussion. And thanks very much for joining us.
Yeah, great chatting with you as well. Thanks for having me.
Hey, thanks for joining us for another episode of the Money Seed Podcast. Please remember to click like and subscribe. It really helps spread the message to other investors, and it helps attract new viewers to the show. We appreciate your support. Thanks very much.